Hey, this is Jenny Jones here. Wanted to give you a brief update here on Merck. I'm getting a lot of calls from my clients. I'm getting a lot of calls from individual stockholders on what do they think my position is on Merck. And I'll leave all the technicalities to all the big professionals and all those other people. But I just wanted to give my take on it. And again, always seek out your own investment advice from your own professional. But this is what I tell my clients when they call me, those who are under my management in my portfolio. First thing is Merck took a little bump here October 1st, and we can see here it broke out of the normal cycle here with the rest of the stocks here as far as their percentage movements and or the stocks that are in that play, in the pharmaceuticals play. Merck will be represented here at the top. As you can see here, Merck is in blue, and we'll go Eli Lilly here on the light blue, and then we'll go red here. We will go with Bristol Myers, and then the green here is actually Pfizer. And what we're looking at here is we're looking at a percentage move in the stock play from the 1st through the 4th. And we know the announcement came out on the 1st, and over the weekend and through today, it's already up almost 13%. And the way you play this is there's going to be a small bump again, but you look at the long term of Merck. If you start paying over 85 to 87 per share. I think right now it's probably trading at right now it's trading at $83. If you buy it more than, I don't know, a couple more dollars more than that, then you're gonna squeeze your margins. But I think now, if you're gonna make a play on it, I think now is a good time to make a play on it. I would ride it maybe if I was to ride it, and what I was telling my clients, I'd get a $10 bump out of it. I'd ride it from 83 to 93 and probably get off of it. I think long term, Merck still has some good cancer drugs, things of that nature, but for them to have this pill for COVID-19, I think that is going to give it a small bump. As COVID-19 gets more under control, you are going to see this taper off a little bit. Again, this is a $70 stock, or has been averaging over the last 365 days. It's been averaging anywhere between 70 to 80. I think for it to break out and go to 82 and then possibly into the 90s, I really think it's a stretch beyond that. We'll see some pop out of that, and again, they pay a nice dividend, which I like. They're probably one of the most top 10 dividend paying dividend yielding stocks. They are amongst many, but they are one of the top. They are at least in the top 10 when you put them up against Altria, Philip Morrison, and Lockheed Martin, and Bank of America, Verizon. You put them in there, they're right in that mix. I think Pfizer pays a nice one as well. But if you're going to own the stock, definitely what I tell my retirement clients is, if you're going to own the stock, you want to own it. You do want to own it in your mutual fund, and there are some mutual funds, the Vanguard 500 Index Fund and the Vanguard Total Stock Market Index Fund. Those will own them indirectly if you wanted to try to have a play in your mutual funds and pick up some of those dividends along the way. So again, it'll be nice. But again, that's my take on it. I really wouldn't try to buy the stock more than $90. But if you do get on it, I'd ride it up maybe $5. If you're trying to get it right now, I'd ride it up about $10 to about the 94, 95 range. Does it have the potential to go more? Yes, but you don't want to get slaughtered out there. So again, you want to be conservative when it comes to individual stocks, especially a stock that has a large breakout like this for a drug that may not have the long-term sustainability. I would be more vested in their cancer drugs than this particular COVID pill. So again, this has been Jenny Jones. Hopefully all is going well. Take care. Thanks. Goodbye for now.